And we do have breaking news for you. The stock market closing down late today. The S&P falling into a bear market territory. The Dow sinking nearly 3%. NASDAQ dropping more than 4%. Meantime, more pain at the pump. The national average for a gallon of gas is $5.01. Just last week, the average price for a gallon was $4.86. NewsNation's Paul Gerke is live for us on Wall Street. So, Paul, what does the Fed plan to do this week?
Hey there, Nicole. The Fed is going to do something. The question at this point is just how extreme those measures are going to be. Any hopes at stabilizing the gains we had gathered in late May were dashed today in a massive sell-off. And now all eyes are turning toward Fed Chair Jerome Powell, who is set to speak on Wednesday after the central bank's two-day meeting. Let's look at the damage first. The Dow shedding more than 876 points today. That's nearly 3% of its overall value. At one point today, every S&P 500 stock was in the red. It closed down more than 20% from its all-time high that it hit back in January, solidifying the bear market in the eyes of many experts. The tech-heavy NASDAQ hemorrhaged today, 4.68%, losing more than 530 points. It is now down more than 33% on the year. That blood red start to the week comes in anticipation of the aforementioned Powell announcement that's coming up on Wednesday. He will break the news at 2:30 Eastern time, and it will shape our immediate economic future. He's expected to raise rates by at least half a percentage point, but new inflation data in this stock market chaos we saw today could be signs that the Fed might take more drastic actions, like raising rates by 3/4 of a point. That's something they haven't had to do since 1994. Right now, Nicole, stocks and bonds are very volatile on fears that inflation is not quite done with us, and the cost of everything just keeps going up, like the gas prices you mentioned. Now, we're not quite in a recession, though. That's generally defined by back-to-back falls in GDP in consecutive quarters. Our GDP did decrease last quarter, the first quarter of this year, by 1.4%, but it increased in the fourth quarter of last year, so we won't know we're officially in a recession until the end of the second quarter of this year.
Yeah, we're calling it very volatile, certainly accurate. So, Paul, tell us, why did things start out so badly this morning?
Well, the bad news really started on Friday. We got the consumer price index report that showed inflation was actually closer to 8.6%. We knew it was bad. We didn't know it was that bad. And it seems like the Fed still can't seem to get it under control. So when they talk about another half interest point raise, a lot of critics say that that's not going to be enough to get inflation in check. They raised it by a half point back in May. That was the first time the Fed has had to do that since 2000, but clearly more action is needed as everything seems to be heading in the wrong direction, Nicole.
Yeah, absolutely. All right, Paul Gerke, thank you for that. Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.